Hello everyone, my name is Elizabeth Bilugina and I'm happy to greet you today at the webinar Introduction to Trading. So I hope that you can hear me and you can see me and you are ready to talk about trading in general and forex trading in particular. I need to point out that during the webinar, you may ask me your questions. For that, the webinar software has a special questions tab. You can see it in the menu and you can type in your question regarding to trading in general, or maybe you have some specific question. So the recording of the webinar, as usually, will be available at FBS Analytics and FBS YouTube channel after we finish our talk today. And also, they have this traditional introduction to trading webinars at the start of every month. And today we will have the part 1 webinar. We will discuss some general ideas related to trading. And tomorrow we will do some practice in MetaTrader 4 software. We will discuss MetaTrader 4, MetaTrader 5, trading stocks, trading currencies. So feel free to join us for both days, today and tomorrow. There is a separate registration for tomorrow. The time is the same as today, and the registration link may be found at FBS website, Analytics and Education in the top menu, and the tab Webinars, which contains the dates, topics, and links to the upcoming educational trainings which we hold here at FBS. I hope that everyone is in a good mood and ready to learn something new. In the meantime, if you are eager to share with me with your thoughts and to give me some feedback, you are very welcome to let me know in the question box whether you are completely new to trading, because actually these webinars are for newbie traders, as you can guess from the name we have, because it is Introduction to Trading. So what is your experience? Did you already started trading? Maybe you faced some difficulties, or you haven't opened any trades at all yet. Please let me know so that maybe I can adjust my presentation and make it more helpful to you. Let me have a look at the names of people we have here. Surprisingly, I see people who have already been at many our webinars. Well, greetings to you if we have already met at the webinars. And if not, let me say that my name is Elizabeth Bilugina. I'm the currency analyst at FBS, and actually I analyze not only currencies but stocks as well. And I have been trading since 2010 and working at FBS since 2010. So by now I have, I guess, some experience, and I will be happy to share with you today what I have learned about trading and what I have found out about the markets. I see that some questions arrive here, and a strange question from Daniel. What's the attitudes of a profitable trade? If you are still here, please clarify what you mean, because it is kind of hard to understand. There are profitable trades, there are unprofitable trades. That, I think, happens with every trader, but to achieve profit, of course, you need to be disciplined, to make sure that you use and abide by the rules of risk management, and to analyze the market, to have a strategy a lot of elements are necessary for most of your trades to be profitable. A question here from John. He says that he has been trading stocks for a year now. Does trading Forex and the strategy somehow the same? And how Forex trading works? A great question. Thank you for it. I think that the webinar will be useful for you today. I think that trading Forex is different, but not like there is, I don't know how to say, some great difference. The main differences lie maybe in fundamental nature of things, because after all, stocks and currencies, well, they have different nature. We know that stocks represent the value of the company, while currencies are represent exchange rates between the money of different countries. So that there is this country specifics in the Forex market. There is specific dynamics to Forex trading, because we do not see so many gaps at the chart, and trading is taking place 24 hours a day, 5 days a week, and that I think makes a difference in the sense of the market's momentum and the sense of the market. As for technical analysis, here we can say that a lot of knowledge you have gained when you traded on stock market will be perfectly applicable to trading currencies. So in that you have an advantage. I tried stocks, I tried currencies, and for me, these markets do feel different, but I think that there are both merits and maybe some specifics about each of these markets. If this is kind of in general understanding, and today we will speak about more things which are related to currency trading, and tomorrow we will see how the software for currency trading works, and well, all things which come to my mind and I can share during this starting and introductive webinars, I will surely share. A statement here from Ebenezer. He says, I hope that I pronounced everything correct. He says that he always wanted to open a trade, but needs confidence. Well, it's a good thing that you actually started with trying to get some information about the market and not just putting money on your account and clicking on some buttons, because I know a lot of people who are so hurried to start trading. They want to see profit just now. They want to see that amount of money written in their open position, so that they kind of don't want to spend time on learning anything. And the most thing is not to rush into trading, not to be too obsessed with it at the beginning, and to get some information about what is happening here. So I hope that it will be helpful. And I see that here we have comments from Muhammad and other people who are first timers. And well, great. We can, I think I have a kind of plan. We will go with the presentation, and any questions you have during that, please feel free to ask them. So let's go through the basics of Forex market quickly. I think that maybe you have some understanding that, of course, Forex market, foreign exchange market, we trade currencies here, and well, it is good to understand that currencies are very, very different. So although almost every nation of the world has its specific currency, not all currencies are so-called liquid or popular. There are so-called major currencies like dollar, euro, British pound, Japanese yen, Swiss franc, and currencies like Australian, New Zealand, and Canadian dollars. And these currencies are traded all over the world by different players of the market. They are liquid, they have floating exchange rates. As a result, forex traders, those people who are individual traders, they also have access primarily to these major currencies and focus their main efforts on trading these currencies. Even if you compare trading conditions and among different brokers, the conditions to trade these major currencies will be more beneficial for traders just because they are so popular and widespread. Also, there are some exotic currencies like those I have listed here, and you can see that all currencies, by the way, are represented as these three letters, which can easily be transformed into the name of the currencies. So Brazilian real, Singapore dollar, Mexican peso, Turkish lira, South African rand, Hong Kong dollar, Russian ruble, and Chinese yuan are the exotic currencies I've mentioned. And although trading conditions, some kind of spreads, swaps, and so on may be worse for these exotic currencies, still, in many cases, it is worth trading them because they have some specific things about the economies of these countries and the sheer difference between the economic position of exotic currency and a major currency can be a source of good trends and represent interesting trading opportunities. So distinguish between the currencies and, well, be broad-minded here, try different markets, different currencies. Another important thing to understand if you only start your way in the forex market is that actually it is the largest financial market in the world, and I don't remember exact number which is for now, because every 3 years the Bank of International Settlements renews the statistics, but surely the daily forex turnover in the world is sometime bigger than $5 trillion, and that is much more than on stock market and bond market and other markets. So forex market is really big. And if you imagine that this large scale of trading which takes place is the result of actions of some individual traders, you are mistaken, because the main participants of forex market are large commercial banks like Goldman Sachs, Deutsche Bank, JP Morgan, and so on. These banks are linked together by an interbank network, and all other players are kind of switched on to this global network of the banks. To put it simply, the electronic trading platforms exist. As you can see here, some dealing things which connect all the players which are situated in different countries and different regions of the world. So there is no physical place, no building where forex market is located. It is spread electronically over the planet. So it is not a kind of traditional exchange in the sense that classic economists put it in. Other players at this market, apart from these commercial banks, include central banks, of course, governments, because they have currency reserves and they need to perform exchange operations. There are smaller banks, there are multinational corporations like Apple, Google, Coca-Cola, who have revenue maybe in one currency in particular region, but need to perform exchange operations and um, have payments or costs in another currency, so they are making forex transactions, and they hedge against the risk that their currency will depreciate. There are large hedge funds who make bets on currencies and make a lot of different kinds of trading in the currency market. There are institutional investors and so on and so on. So you can see that it is a big market. And somewhere a tiny part is represented by traders like you and me, who can also trade currencies through access to the internet, make bets whether the euro will rise versus the USD or the British pound will fall on Brexit. So we as individuals have this opportunity, but to be clear, we cannot move the price of any currency pair by our actions, because the market is big and our positions represent only some tiny part of it. If you compare forex market with cryptocurrency market, it will be different, because there the market is small and actions of some players can have an impact on the price. Forex market, you need to adapt to the price and look for the opportunities that arise from the market. So you are not creating things here by yourself. And what else can I say? The important thing that to start trading, of course, you need access to the market, and that is provided by a forex brokerage company, a forex broker, for example, FBS or other company. So that you need to open account, get account number, get a password, download trading software. For forex market, it is MetaTrader 4 or MetaTrader 5, and then log in to MetaTrader with the account number and password you got from your broker, so that you will get connected to the market. So internet access and brokerage company, two conditions you need to start trading. The procedures with forex brokers are usually quite easy to follow. Of course, you will need to confirm your identity and to upload some document there to make sure that you do not launder money or send money to some other locations through the company, that it is your money you put there and your profit you are taking back. So this is it. Basically, everything is fast and quite simple. I see that there are some more questions. Questions. A question, what is the commission? The commission is a payment a broker gets as a reward that this broker provides you access to the market. However, nowadays on Forex, commission is kind of rare, and that commission is replaced by the so-called spread. We will talk about spread just in several minutes, so keep attention. A question here from Hala Osama. Whenever I deposit some funds in account, I slowly start earning a lot of money. Then suddenly lose them all. How do I prevent that? That is the question, and the answer to that question is very, very simple. You need to have some mechanisms in place that limit your maximum loss in your trade. There are actually a lot of ways to do so in the market, and for those who only start trading, I just encourage you to pay attention to risk management from the very beginning. So imagine you have, let's say, I don't know, $100 on your account, just a random amount of money. The idea is that every trade you make, so buying euro dollar or selling euro dollar, you put on stake in every trade a really small amount of money. So usually it is recommended not to put more than 5% of your account on one trade. So in this case, it would be $5, and then you make another trade and another trade. And with some mechanisms we will talk about tomorrow, you will be able to limit the maximum loss in your trade on the chart and then focus on the profit, so that a trader can easily make a situation then his potential profits will exceed his potential losses in every trade. And with many trades in a row, this will create a good basis for a sustainable profit over many trades that you have. I hope that that sounds more or less comprehensible. I will make some visuals to just explain this idea clearer tomorrow. Do all currencies take swap when you hold for a long period of time? Pakisel asks me. And yes, because swaps are related to interest rates of central banks of the currency in question. So every central bank sets interest rates for every currency. Such interest rates exist, and as a result, swaps will matter if you hold your position open for a long time. Usually they become meaningful when you hold a trade open for more than 2 weeks. So maybe 1 day, 2 days, that won't be very important, but from 1 or 2 weeks, that would be big enough to think about it, whether it helps you or it subtracts some points from your trade. Okay, I see that there are a lot of other questions, and we will try to answer them a bit later, because I suggest we go with the presentation for you to see what I'm talking about and not to wonder what it is, because I do have some important moments in the presentation. So why trade Forex? Just a quick go through. Because of high liquidity, high volatility. It means basically that whenever you open the chart of currency pairs during the work week, so from Monday to Friday, the exchange rates will move really fast, so that you will always have an opportunity to open a trade, and then you enter the market at specific level, the price will go up or it will go down. The key is that it probably won't stay at the same level, and the fact that it will change means that you will be able to make money on that change. So it is good that exchange rates move fast in the Forex market. It is open every day of the week except weekends, so trade whenever you like, unlike stock markets where we have specific trading sessions which are limited in time. Cost of trading is lower for Forex trading. You can check the information at LVS website. Actually, just a couple of dollars, or I don't remember, maybe just $1 for some micro accounts, just to test the situation. That can be done. well, and you can choose the amount of money you want to spend on trading, depending on the amount of money you have. But the most important thing here, of course, that in no case should you trade with money that are critical for you, which you need for some other purposes, like your life or well-being depends on that amount of money. You should be ready to the fact that, well, we do not know how you will trade, whether you will abide by the rules or risk management or not, whether you will learn something and be cautious and think a lot about your trading or not. So a chance, of course, is that you will lose some of the money, or if you do not manage the money properly, you can even lose the entire amount. That risk exists. So do not trade with the money you need for your life, because that will create high stress you don't need at all in your trading, and that stress will prevent you from trading with a cool head and making good decisions. Also on Forex, it is possible to use leverage, and we will talk about that a bit later. And of course, be your own boss, do your activity whenever you like, and well, you decide what to trade. No one is like making you do something. Here is the example of a chart of the currency pair euro-dollar, and remember that on Forex, all currencies are traded in pairs, because we can estimate the value of a currency only versus another currency. So one currency doesn't exist in a vacuum, and the term exchange rate also means that we exchange one currency for another currency. So two currencies are necessary for us to have the foreign exchange transaction. And when we see in our trading terminal these currency pairs, which sound like euro, dollar, British pound, US dollar, dollar yen, and so on, we need to bear in mind that the currency which stands in the first place in this pair, in this case euro, is taken as a one, so one unit. And when we look at the chart here, we see how the value of this first currency in the second currency changes. So here I have a chart for last year, and you can see that at some point in April, euro dollar was around 1.2350. So 1 euro costed 1.2345 US dollars. Then time passed, and 1 euro started to cost something like 1.1435. So the value of the euro in US dollars declined from 1.2345 to 1.1435, and that is reflected by the line on the chart, which is having this downward bias. So we analyzed the charts of currency pairs, and this is how you should regard this situation. The logic of trading is also, well, not really hard to grasp. You can just regard the thing as maybe a stock or an asset, which is represented by the currency which stands in the first place in the currency pair. So if we have euro dollar, and we believe that euro, the currency on the first place, will go up versus the USD, then there is sense for us to buy the euro now in order to kind of make money on the fact that later we will get more dollars for this 1 euro. As a result, we open a buy trade in euro dollar. We open a trading software, and we just click euro dollar, open order, and click buy and specify the levels of this trade. If we think on the contrary that the euro will go down versus the US dollar in with the course of time, maybe in a few hours or in a few days, then we sell euro versus the USD, and it means that we open a sell trade in euro dollar. This is how it works. I see the questions, and in a while I'll make time to answer them, so don't worry that I still haven't answered. It will be done in a few moments. So just the logic of trading here on the slide. When we buy euro, we do the buy operation relative to the euro which stands in the first place. When you close the trade, this buy euro dollar order, you simply hit close trade button, so you don't click sell dollars. So just look at the currency pair as an asset, entire asset, which is just composed of two sides, the side of one currency, euro, and the side of another currency, US dollar. And if you regard it as the levels price of euro dollar, that will be easy to understand that we buy it, we sell it, we kind of see it as a single organism with two parts. More about currency pair, like a stock, a currency pair has its value, which is called quote, and usually the currency pairs are quoted to 4 digits after the decimal sign. And if you open FBS MetaTrader, you will see that there are 5 digits after the decimal sign, but this last number is kind of more technical and necessary for your orders to be more precise. But for the purposes of analysis, usually the first 4 numbers after the decimal signs are used. And the last one, the 4th number, representing the so-called smallest unit of an exchange rate, is called pip, or sometimes point. But pip, I think, more common for the forex market. So another important thing, and here the person who asked about commission can pay attention, is that we saw that there was one price for the euro dollar when we looked at the chart, but actually on forex we have 2 prices, which are called bid price and ask price. And this situation, when you see the currency pair and 2 prices, should remind you of coming to a bank or exchange office where you see that 2 quotes. One is higher, the other is lower. Ask price is always bigger than bid price. And the difference between these 2 prices is called spread. Spread is what is the revenue of a broker. So the reward the company gets from providing you with trading software, with access to the market, and everything up to the webinar you are watching now. So this is where the interest of a broker in this situation. It means that if spread exists and broker gets it from the client, the broker doesn't take any commission if you pay spread. So spread is more than enough, and well, this is how it works. So spread may be different for different currency pairs, and the pairs which consist of major currencies, for example euro dollar, and are popular, are liquid. Here the spread usually is smaller. You should have a look at various trading conditions. For example, let us see what FBS has. If we look at trading instruments at the website, we will see that there is minimal spread for a currency pair, typical spread. The information is listed here. In addition, if we look at the account types, we'll see that commission is 0, and this commission is 0 where we have some spread. So for some accounts, the spread is floating so that it can change when the market conditions change, and sometimes it is smaller than spread on fixed spreads account. Sometimes it can be bigger. The situation may differ. Sometimes spread is fixed and you know for sure what you will pay for every trade you make. So different conditions are here. And I saw that someone asked about the initial deposit with FBS. You can see that also it starts actually from $1. I remember it correctly. For cent account, where you can imagine that you trade forex market like in miniature. So you can trade with your real money, but of course on cent account the amount you invest will be small and gains or losses will be small as well. So if you do not want to start learning and testing the company's conditions on demo account, if you want to experiment with real money in order to fill the situation, well, maybe cent account is a great solution for a start. If you are comfortable with that, why not? Micro account here, the deposit increases, the leverage increases, by the way, so it is a bigger step a bit. Standard account is the option which is balanced for traders who already have experience and well are just aimed to trade in the market like on the daily basis, on the weekly basis, so constantly work in the market. Standard account. ECN account is more like for professionals here because, well, if investment, the initial deposit is higher, so you should have some knowledge of the market. It is not for a start. I do not recommend you to open this big account just now. Zero spread account, well, for those who do not want to pay spread, it is an option to pay commission, fixed commission for one lot of the lot is the volume of your trades. So you can just check it more, and if you want to have really full information about the conditions in FBS, I recommend you check about and documents, because here you can download FBS agreement, and there all conditions are listed in greater detail and everything is explained really, really well here. So just check the information here in order to see the numbers of different parameters and how to get specific conditions if you are interested. So returning to our situation here, I have prepared some slide with terms and definitions you may come across when you start to study forex trading, and the terms and definition may look a bit unpleasant at the first sight. I thought that they were unpleasant, but actually just spent a couple of minutes to understand what is meant here, and you won't get this, you will get this irrational fear go away. Let us start seen what it all means. Leverage, the word we have already seen, is a feature of trading currencies, a feature of forex market. Forex brokers do offer leverages, and it is offered by brokers in order to allow traders to open bigger trades, because the nature of the interbank market is that there are the so-called lots, so standard amounts, standard sizes of positions, like here. So one lot, one standard lot equals to 100,000 units of a base currency. So 100,000 euros, for example. And I don't think that anyone is ready to open position that big. However, with leverage, you can open position with only the size of, for example, 100 euros. So 1,000th part of this entire amount. The leverage, in other words, provides you with the ability to control a large amount of money using a very little amount of your own money and borrowing the rest from the broker. So you want to open a specific trade, and for example, with 1 to 100 leverage, you need only 1% to provide only 1% of the trade size, while other 99% will be added by the broker, and this way you will be able to open the trade. So leverage is a tool that multiplies your capital and allows you to open a trade of bigger volume. The amount of capital you use to open this big leverage trade is called margin, and margin is kind of collateral, the amount of money you need to have on your account, and this amount of money, margin, acts as the kind of collateral, the guarantee for a broker that your trade won't go to the negative territory, so that the company won't be in a loss if your trade goes bad. So the maths of trading, we may discuss it if you are interested to have an example of how it is calculated, but the general idea is that initial position sizes in the markets are big, so you provide you need a small sum called margin in order to open a trade. Choose a leverage, and leverage multiplied by margin, that will be the total size of your trade. And as your trade size with leverage is bigger than the amount of money you otherwise would be able to trade, this bigger position size allows you to get bigger profit on every pip the price goes in your favor if you open to trade and it is successful. On the other hand, it is necessary to understand, of course, that nothing comes easy in this life, and if you have a losing trade, of course, the fact that you trade with a bigger amount of money will also mean that every pip of loss will cost you more as well. So the basic recommendation for those who only start trading on Forex is to choose some reasonable amounts of leverage. Usually if people start practicing trading and they see that I don't know, they opened a trade, they got $20 from that trade in profit, and then they think that I could have used a bigger leverage and I would get not $20 but $200. And here you need to kind of stop yourself from becoming too greedy, because too big a leverage will surely increase your risk. And however much you want to earn money fast, the idea is not to rush in to get to big leverages only if you mastered the trade maths, the technical analysis, and so on, and you can really handle it. Finally, the thing I started explaining is swap. It is an interest fee that is either paid or charged to you at the end of each trading day if you keep your trade open overnight. So if you, for example, bought euro dollar and then an hour passed and you closed the trade, no swap is applied to your trade. However, if it happened that you opened a trade on Monday and closed it only on Friday, in this case, you will have to deal with swaps. And once again, we can check here. You can see that there are swaps for long positions and for short positions, and they either are added to your or they diminish your profit depending on whether you bought this currency pair or sold this currency pair. But swaps only if you hold your position for longer than 1 day. And once again, I have mentioned that for several days the amounts are not really big, so they won't affect the result of your trading. The percentage of swap relative to your profit or loss won't be big, so no need to worry about that. And important thing here, how to become a forex trader. That won't happen with you immediately. No way. Some time will need to pass before you understand everything. And I think even the things I talked about today, if you heard them for the first time, they will need some time to kind of sink in. What is my best advice I can offer for newbie traders is to get a test account or a demo account and to see how everything works for yourself. And actually, it would be rather nice if you are a beginner and if you open a test account, a demo account at FBS today without putting your money there, just having a demo account opened with the virtual money there, and attend the webinar tomorrow, and together we will try to open some trades to speak about the basic concepts of how to analyze the price chart and to analyze fundamentals for currencies and to do everything you need to know about MetaTrader. So then you will have a better understanding of how the amount of money you put on your account turns into profit or loss, and what is the ratio between the amount of money you put on one trade, the leverage, the gains or losses for one pip. So all of that will become parts of a single picture. That is the start, and then you will just be learning more about why the currencies are moving, how to pick out important levels on the charts and so on, where to buy and sell and how to make these decisions. And somewhere you will become more and more confident in your ability to trade. You will practice maybe firstly on demo account, maybe then with smaller amounts of money on real accounts. And that how it goes, it won't happen in a day. but growing your knowledge, being patient and reasonable, here is actually a good way of success, a good way to start something interesting, because as for me, I've been looking at the market and trading on the daily basis for 9 years, and well, I can't say that I'm tired of that or anything, because it seems that it is really interesting. The markets changes, the exchange rates go up and down, something happens in the world, and it continues to be rather exciting even after all this time. So don't rush, but feel free, make sure that you put this solid foundation in your trading, that you learn things from the start and not miss something important in the beginning, something that will later lead to a mistake. That would be very unpleasant. So just the basics, I think we will be able to cover at the webinar that continues tomorrow, and then I will recommend you some things to check and read and watch in the materials which will be sent to you after this webinar. So that will also help to form this picture. In the meantime, at the slide, I have here a scheme of how you can proceed with the task at hand. So you can visit the website we have already visited today. You can open an account. The button is there. I will show it to you. Then download the software and use the data you were given by the company when you opened an account. You will get an email and it will pop up on your screen. In order to log into MetaTrader, you will then be connected to the market and gain opportunity to practice, to make some trades. To see how it is here, the button is here, open an account, and just some it is related to my specific internet here, so don't pay attention. You click open an account button, and you will need to fill in just your email or name, and then get to the personal area at FBS, where you will be able to choose the option of demo account and use this demo account to connect to MetaTrader. On the tab trading, you can see trading platforms. They are for different operation systems, and WebTrader as well is available here. So everything is here. Just use this information to set the things up. And the useful links will be included in the presentation I sent you once again. So now I think I can get to questions and answer them. How do you control your emotions when you encounter the losses? The question from Pakiso. Well, I trade with so-called stop-loss orders. It is an opportunity to set out the level at which your trade will close if the market goes against you. So if you bought a currency pair, the price goes down, and at some point the trade closes so that you don't lose more. And for me, this stop-loss orders limit the amount of negative emotions I have. I try to analyze the chart, and then I made a decision. I stick to it, so I do not like rush and change my open trade, because that can be destructive. And well, I do not sit the whole day during the monitor and looking at the trades without just getting glance to other things, because well, you need to divert, otherwise it will be difficult. And well, other ways to manage emotions also exist. What is the difference between FBS Trader software and MetaTrader? FBS, the software you will use at FBS, actually is a MetaTrader. It is just simply customized by the company. There are some features like the fact that the company's servers are switched on in this version of MetaTrader, so you don't need to make any adjustments, and you will be able to connect to the market right away. There is, what else? Some market news, I think, there in trading terminal. So, but it is MetaTrader, MetaTrader 4 and MetaTrader 5 is what you can find at FBS. It is simply called by the branded names. Some questions related to the economy of things. What is the deflation and what is the CPI? Well, to be short about it, we will speak more about it tomorrow, I think. CPI is the indicator of inflation, and I think everyone has an understanding that a currency is affected by inflation. We know that inflation is the situation when the currency gets cheaper and you can buy less things with the currency than you used to be. The inflation readings are making an impact on the value of currency. So when this data comes out, it makes an impact on the market. And deflation is kind of the opposite. It means that prices are declining, and that is not a good thing either. So the ideal situation is that an economy has a small inflation, but inflation exists. So these are the things. They will be necessary to you if you trade, if you look at the fundamentals of the currencies you trade, and if you consult economic calendar, you will have to learn what these things are. A question here, you always organize webinars for beginners. For now, we have an arrangement that at the start of every month, I make these 2 webinars for those who joined FBS during the past month, in order to provide the opportunity to get questions answered and to get trading explained. So I think that next webinars will be at the start of May, webinars for beginners. And we also have other webinars which are devoted to trading skills, fundamental and technical analysis. And that webinars may be seen at the website in the webinar schedule. Here you can see the program and register for any topic you are interested in. A question here, what is the best level to place a stop loss order? A rather big question. I will give you actually some link here for you to study that in greater detail, because well, it is important. I can answer this question by saying that stop loss order should be related to the situation you see on the price chart. So to some support and resistance levels that exist there on the one hand, and on the other hand, it should be connected to the amount of money you can risk in one trade, and consequently to the size of your deposit. So you see that you have $100, you can risk $1, and then you kind of calculate how this $1, how many pips this $1 can allow you to assign to a stop loss order. So something like that. And you check levels in the chart as well. Question: how can a beginner become a good trader in a short time? I think that it is definitely necessary to check the basics we have at FBS in Forex Guidebook for Beginners, and to attend webinars, of course, and to try to practice for yourself and see how it works on demo account maybe, because you can of course read a lot of things and listen to a lot of things, but only when you try how it works you will truly understand that. And here at FBS we try to emphasize and to give traders the tips which allow people to focus on the stuff which is really the most important. So that, I hope, altogether will be a good recipe for your trading. So guys, there were a lot of questions today, and this is really, really great. I hope that I have managed to answer. And remind you that tomorrow we will have the more practical side of things with opening trades in MetaTrader. So the same time I will be online, and further questions will be answered if you see that something is still not clear. The materials, the video and the presentation will be sent to you after the tomorrow's webinar, so that both recordings and the presentation will be sent in one letter for everyone. So this is it. Thank you for active participation. You were very, very active today. Another question: what easy way to make profit? And that is a tricky question, really, because if that easy way could have been described in one sentence, everyone would be millionaires, but we don't see that happen. The easy way, I think, I can't call it easy, actually, because maybe for someone it will be easy, for someone not. We do not know who are you, what is your experience, but the way is surely to gain some knowledge and try to act with a method, a strategy, follow the strategy, limit your risks, and well, be optimistic and keep on learning and keep on moving. I know that it sounds general, but actually this is truth, and you should try and see how it works. So thank you for your attention, everyone. I will be very happy to see you tomorrow. And tomorrow we will do some practice, so please show up. And well, I wish you good rest of the day, um, and all the best of success in your future career as forex trader. Thank you for your attention, and well, goodbye everyone. Thank you.